On this special edition of Black Friday, Fintech Fridays, I want to talk about a $14 trillion opportunity that fintechs are not looking at today, and that's supply chain and trade financing.
Can you elaborate a little bit on what is going on in the trade finance sector today as it stands?
So typically in a supply chain financing, if you take example of a consumer good company, it will be, when goods are manufactured, then they are, picked up by distributors, then it goes to sub-distributors, then it goes to the retailers and then to the consumers. And that's where, there is that whole supply chain that is from distributor downward, that is today pretty undercapitalized. And at the same point of time, everybody tries to just get some working capital or other money from their own respective banking relationships. Most of the large consumer good companies don't play any role in that. They have no visibility, and that I think is a big miss that they are making today, and that's also a big opportunity. So right now what's happening is that there are two distinct trends which are happening. So one trend is that we have traditional big consumer companies like Procter and Gamble and Unilevers of the world, which do traditional distribution, manufacturing to distribution to retailer kind of stuff. And then we have other players like Amazon's and local players in multiple markets, which dramatically change the way the supply chains are managed today and the way they are financed also. The reason to today, consumer good companies are struggling in this space is because most of their supply chain demand generation and fulfillment is paper based, and they have old technology, the ERP technology, which is pretty old, not really digital, and not really talking to the end retailer out there. So I think that's a big gap and challenge that they are facing today.
How can a better supply chain financing solution be developed? What's involved?
In my view, these companies will have to reimagine their, mindset and also their way of, doing stuff. Typically, what has happened is that they have these distribution networks, they have regional guys, they have never thought them as their clients. They've always thought them as their extended, selling arm. And I think that's a big difference. So you go on Amazon or you go on, Flipkarts of the world, and if you are a B2B guy, you will be treated as a customer, So they are paying a lot of attention on the customer experience. They are paying a lot of attention on, the ease of use. Most of these other big traditional companies haven't really done that, So for them, these guys are their extended distribution arm, just, get demand in spite of having good relationships. They want money upfront even before they dispatch any goods to them.
Who are the financial players that need to be in this?
What has happened is that banks have tried to finance these supply chains, but they have been able to do it more on a episodical manner and more on a just case by case basis. So there is no central repository of data. There is no central programs which are done. And even if they are put together, programs, the administering those programs, the approval rates, the interest rates, the ability to increase or decrease the line limits and all that are very, very manual. So imagine a retailer putting all their orders through a mobile app. That's where the digitization has to start, at the origin. So the origin is retail orders. What happens today really is that there is a lot of push towards the retailers. And in the digital model, it will be pull, so retailers will start the ordering online through mobile apps. That will start the data, flow. And then that data can be transferred over to fintechs, firms and banks to design better credit products, better interest rates, more money for these retailers or distributors during slow season or even prior to start of a busy season, because that's where they need most of the money. So I think that aspect is totally missing today. So one of the things we are doing at Biz2X is that now we are partnering with, quite a few of these players. So one of our partnership with Oyo is a great example. They're in the hotel business. So we are looking not just at, Oyo as a company, but we're also looking at, all the downstream hotels, that they are partnering with, how their cash flow is happening, what is happening, where they are spending their money. Now that same example can be taken into other industries that now we are partnering. So we're going to announce few big deals, very soon. And the idea there is that, we are saying that, how do you take this whole demand generation piece, digitize it, then start predicting it, and then, introduce credit products for more straight through processing. My take is that on this Black Friday episode, which is the biggest time for retailers out there, this is a wake-up call for the retailers and the CPE companies. This is a time for them to take advantage of a $14 trillion opportunity, which they can unlock in partnership with fintechs and also digital platforms.